Good afternoon, everybody. You're very welcome to the third workshop in our investor literacy program as part of the Seeds of Bravery project. In today's workshop, we're going to talk a lot more about the latter end or the latter stages of the whole investment process. So, talking about what happens after a company has pitched to a group of angels or an individual angel or a syndicate, how those syndicates decide on whether to invest or not, what the process of due diligence looks like, and portfolio management. So we've got hopefully what's going to be an interesting couple of hours. I'm joined by my colleagues Fionnuala Wall and Georgie Brown from Access BIC. Good afternoon, ladies. Thanks very much for helping out. So the three of us are going to be your kind of guides through the next couple of hours on this investor literacy program. So we look forward to that. So Fionnuala, you might take over, and Fionnuala's going to give a little bit of background to the wider Seeds of Bravery project. This investor literacy program is one part of a much larger project supporting Ukrainian deep tech startups. So thanks, Fionnuala.
Good afternoon, everybody. Lovely to have you on board in this final workshop of our investor literacy program. Seeds of Bravery is a 20 million euro project funded by the European Union to work with and support Ukrainian startups, bringing them closer to the EU. Investing in such groundbreaking projects drives economic growth, generates employment opportunities, and enhances overall quality of life. Seeds of Bravery remains committed to strengthening the Ukrainian startup ecosystem by empowering entrepreneurs to bring their ideas to life and expand into global markets. To date, over 8 million euro has been awarded to over 300 beneficiaries of the project. Access BIC is one of 20 partners who is involved in running and organizing the Seeds of Bravery project. The Seeds of Bravery project will come to an end in March 2026 and has been running since December 2024. But funding isn't the only thing that happens in Seeds of Bravery. And like today, we are running this investor literacy program. There are many other supports, non-financial supports, programs, and networks that we run right throughout the year. These include angel investing, matchmaking, market fast track programs directly affecting and promoting female entrepreneurship, and also looking at things like market analysis, intellectual property, and patent analysis. So it's really a rounded program in which over 300 beneficiaries will have participated and over 12 million will be allocated by the end of the project. Larry, I'll hand over to you to talk about today's.
Perfect, Fionnuala. Thank you very much. So back to the topics that we've covered so far. So we're on the third workshop today. In November, in September, we started this year's investor literacy program. So we had a kind of an easy start with the first workshop. It was a very high level introduction to the whole concept of angel investing. What is an angel investor? What differentiates an angel investor from a normal retail investor? We started to talk about things like investment strategies, building up a portfolio, diversifying your investments across a number of different companies. We talked about the risks associated with this type of investing, which is high risk investing. But we talked about the benefits of getting involved in companies. Obviously, the benefits being high risk and high reward financially at times, but also other benefits around helping the ecosystem and helping the next generation of founders that are coming through. And we also did an introduction to how angel syndicates work as groups of angels coming together and combining their knowledge and their money to leverage higher levels of investment and better decision making when viewing companies, and how those individual syndicates can work together and create a network, a wider network across a region or across a country or even across a continent, in the example of IBAN. In the second workshop then in October, a month ago, we spoke about the next stage in the process. So what are the benefits of joining a syndicate? How would you go about actually setting up a syndicate? So what are the legal structures behind it? How money flows through a syndicate and into companies? And we started to look at best practice in terms of deal flow, how to screen companies coming through, how to come up with an investment ethos for a syndicate and to link your deal flow and your network and your access to startups to make sure that you're seeing the right type of startups for your syndicate and you stand the best chance of finding companies that you're interested in investing in. So that was the first two workshops. So then, in terms of today's workshop, we want to go on to the next stage. So we want to talk about what happens after a company has actually pitched. So after a company has pitched and there is interest from the investors, it usually moves into what we call a deep dive or follow-up sessions. So we're going to hear from Donna soon, who runs a syndicate here in Ireland, about how that syndicate runs its deep dive sessions and its follow-up sessions. George is going to have a panel discussion with a number of angel investors and syndicate heads who are going to talk about their process around making decisions and onto exits. So the good part of angel investing and talk about some of the successes that they've had over the last number of years as well. We're going to have a keynote to speak towards due diligence, the whole process of structured due diligence, and how you manage a number of companies after you have invested in terms of portfolio management. Time permitting, we'll take a quick 5-minute break. And after that, I'm going to chair a discussion. We're going to slightly flip things in this discussion. So everything has been very much focused on the angel investor. It's an angel investor literacy program. We're going to flip this around in this panel session, and we're going to talk to some startups who've had angels invest in them and see what has their real life experience of working with angels and receiving investment from angels actually been like. So we're going to obviously go through questions and answers, any questions and answers that come up during it. And this is an interactive session, so we really want to promote and ask you to, if at any stage during any of the discussions or panel sessions or keynotes, things are pop into your mind that interest you to ask a question, pop it into the chat. And myself and Georgie and Fanula will be watching those chats, and we can bring those questions into the live discussion. So that's a very important part of today to ensure that you're actually getting the most out of this investor literacy program. It is for you after all. Okay, so we're going to move on. So we're going to talk to Donna Kiernan. So Donna Kiernan is a close colleague of ours. Donna works with the Boole Investment Syndicate based here in Ireland. So we have a long history with the Boole Investment Syndicate. And Donna is the managing director of that syndicate and also CEO of Tenego Partnering. So Donna's going to talk to us about the process that Boole go through in terms of deep dives and follow-up sessions. So Donna, I'll hand the virtual floor over to yourself. So thanks very much, Donna.
Thank you, Larry. It's good to be here. Let me just get my screen up and right. So hopefully everybody can see that.
Yeah, we can see that, Donna. Thanks.
Okay. So firstly, a brief introduction to Boole, right? So as Larry explained, it's an angel investment syndicate that's operating since 2013, and at the moment we have invested 15 million overall in 60 companies and 12 exits so far. Our key focus are ICT, medical devices, life sciences. And at the moment, we're investing sort of 50-50 across ICT and then the life sciences, medical devices sectors. I'd say we're heading towards 50 angel investors. We have a core paying membership of 38 right now. We probably have another 10 to 12 guests that slowly on the on-ramp come to starting to join. And so we expect to be hitting 50 paid up members kind of early next year. This year, in 2025, we will have invested, because we're closing out a few at the moment, we've invested in 16 investments and across those sectors. Now, when I looked at my slides from this time last year, we were projecting 8 to 9, right? So it's kind of thrilled to be saying that we're going to be hitting 16. So things have gone well for us in the deal flow and in the interest on those. Kind of typical investment rounds are 100 to 300K, and it varies with the number of investors involved in those. Very quickly, just put all this in context, we're a not-for-profit organization, and we have a subsidiary, which is the nominee company where the investments go through. And then kind of we operate very, very streamlined, low cost, and explain some of the details on that. And it's one of the things we made changes in the syndicate in the last 2 years is that we brought a lot of the sort of the core effort and administration back in-house, run by paid professionals like myself. And we have a membership fee, and then we have arrangement fees, transaction fees in and out, if you like, on an investment. Core focus is making it easier for investors. These people are busy. They have a choice of what to do with their money and their time. We want to make it easy to do the stuff they like here in investing in companies that they're interested in and supporting those companies, supporting the industry and networking with like-minded individuals. But we also enabling all the investors to be very supportive of the investee companies. Whether we invest or not is to be supportive and give good feedback. Just I'm getting into deep dive and just putting it all in context here. This is our outline process. So what you see in the early stages, there's the pitch meetings, pre-vetted projects, kind of sourced by Access PIC with Larry and the team. And in these pitch sessions, there's a very short pitch and Q&A where the people decide whether they're interested or not. That's it. It's very much to the point. Kind of, you're not meant to get into any great detail in the pitch sessions. You want to see if you're interested and I want to hear more. And that's the purpose of the deep dive. And I'm going to get into that. And following the deep dive, you're asking for commitment. Yes, you want to invest now, subject to due diligence, right? So if everything is right, we're going to go ahead. If anything throws up, we're going to review. So then following due diligence, we're putting together syndicate agreements, power of attorneys, then to sign the investment agreements and to transfer the funds. And then we have typically quarterly reports and hopefully exits that's successful for everybody. Again, to put this in context, in the pitch sessions, keeping everything to the point, you want investors to ask questions just on the basis of, am I interested in this? Do I want to hear anything right now to whether I decide I'm going to put down interest on the sheet or not? That's it. Kind of, and you want to focus the questions to determine that interest in investments. You're suggesting that people do not offer advice, be supportive, stay quiet if you're very negative about it, and let people form their own views. If you have objective knowledge of that particular sector or industry, that's good. So mind your opinions, but explain the facts, if that's what it is. So I'm going to slow down a little bit, getting into the deep dive. When do we hold a deep dive? So firstly, there has to be sufficient interest. We have to look for the number of investors that's interested and the amount they might invest to make sure there's sufficient interest in investing in that particular company. And then we hold a deep dive. The information we need pre-deep dive, because you don't want this session to be asking questions on information that we should have. So you want the investors coming into the deep dive with the right information, sort of the standard information, if you will. And then they want to ask the exceptional questions in that. So I'm sure you've been shared the slides, but this is a standard list of information items that you want on every investment coming in. And then we're asking the investors to prepare a short presentation. It doesn't have to be slides, but to be able to present the information. We want to remind people to put the deep dive in context, remind people of what your core product is or your IP and where you are in your business, the shareholding, previous investment rounds, and what you're looking for this money to deliver on, the new investment, how much is committed, so where you're on the progress on your fundraising, and in that progress of fundraising, where does the money come from? Who is your lead investor? So the lead investor is typically, if it's around, say, of 1 million, you might have a lead investor who's coming in with 500,000. And they're taking responsibility for all sort of the legals and the principal due diligence. And Boole is a small, in context, small investor, a follow-on investor, where there might be 3 or 4 or 5 other investment groups or individuals or organizations. And they have done the due diligence, and we're coming in and we want to learn for them and their due diligence. So we're coming into this deep dive ready to ask the questions we believe are not covered. We're asking specific questions. Sorry, I'm getting ahead of myself now. We're coming into deep dive to ask questions to draw out more information that we want before we get into the diligence stage. So this is typical of a deep dive. Now, you want just enough information. So angel investment is not going in and thoroughly evaluating everything. It's meant to be a fast decision, spreading your investment across multiple opportunities. So it's not meant to be deep analysis in every single one. They don't have time for that, the investors, and they're probably not investing enough to warrant that effort. So we are very much depending on other people's due diligence and their credibility, because typically we know the other investors. So in the deep dive, we want to know the details of the deal, typically being presented, and getting into details and questions on their product development, the market opportunity, their go-to-market, how they're executing on that market, the competition or alternatives or challenge in the market, their team. Now, many of the angel investors would say, we are investing in the people. We are investing in the people and their vision of what they're trying to achieve, because in most cases, the plan changes. And everyone accepts that the plans change. Everyone accepts that things can go wrong, but we want to trust the people that they can deal with these things and execute these things. On the financials and the market opportunity, they do want to check that the fundamentals of the opportunity make sense and the opportunity in the market that they can achieve and go deliver on some element of the numbers. But again, recognizing there's going to be challenges. The ability to execute is everything. So we've seen regularly whether it's academic or research lead coming in with fantastic pharmaceutical or scientific opportunities, but it's not balanced properly with sort of the commercial or the execution ability. And sometimes we're asking people sort of to go back and maybe find that capability. That might be the feedback back to them to get the commercial execution ability into their team. So it is very important that people see that stuff is going to get done, and not just from a scientific sense, but also from engagement market or wherever is necessary to progress the plan. Coachable, likable, trustable. These things are very important. If someone is coming into the room and they're very arrogant and they're not answering questions, and it's irritating that they're being evasive and over cocky, if everyone understands the term. If they're not coachable, if you can't work with them, we can't invest in them. And that's just a general thing. If you don't like somebody, you're not willing to support them. It's as simple as that. Part of that trustable bit is communication and transparency. So regular communication is good. Now, Boole is typically, as I mentioned, a small investor in that context. So we don't have right to dictate all the information you get. So it is a courtesy in many cases. And we're on the backs of some of the lead investors in this. But the more communication, the more open a company is with their challenges, the more transparent, the more they're trusted, and the more that people can step in and help if that's required. So that's a very sort of quick overview on sort of the structure, specifics in particular problems, particular challenges, particular businesses, projects, and so on, kind of would draw deeper in certain areas. Some of the easy projects to invest in are the projects coming in very well prepared with information and backup data and data rooms ready to share information as required. So it helps a lot to speed up the investment and how prepared the company is to be able to address any questions. After that, we're asking the angels, you have enough information now. How much do you want to invest? And this is a commitment at this point. And as I mentioned here, subject to due diligence. Yes, I'm willing to invest my 10 or 20,000 euros subject to due diligence. And it basically says it's all yes unless something throws up on the subject or the sometimes superficial due diligence, because again, we are trusting the larger lead investors and their information provided. And then from there, we invest as committed, unless there's DD issues. So that's me, and happy to answer any questions on the back of that.
Super, thanks so much, Donna. If anyone has any questions, if you want to put them into the chat, I think that was really informative, and the panel discussion should build nicely on that information. So brilliant. Thank you very much.
Okay, it's no problem. I hope I wasn't speaking too quickly and people understood me. So
I think it was a great setting for what's coming next. So thank you very much.
all right. Thank you, Jack. Okay, thank you.
Okay, super. So we'll bring in the rest of the panelists. Good afternoon, Aidan. And
Afternoon.
Yuri and Sasha are going to join us now as well. So welcome everybody. Hopefully this will be a nice, short and sharp conversation. We've got three gentlemen from very different backgrounds to share some information and support in, yeah, I've gone a little too far. Support in what are good questions? How do you maybe spot a few red flags? How do you work with founders, and what are the different kind of options on that? So I might start by just getting you all to a very quick one-liner on who you are, if that's possible, just to let everybody know, and then we'll move through some questions. So Aidan, we might start with you if you just want to introduce yourself briefly.
Okay, Aidan O'Driscoll. I run the largest investment syndicate in Ireland. We primarily invest in life science companies. We have 30 companies currently in our portfolio. We have invested 80 million to date. And and we've had 8 exits over that time period.
Okay, super. So we'll delve a little deeper into that momentarily. Sasha, do you want to say hello and who you are?
Sure. Hello, everybody. My name is Sasha Raminli, and I'm in investing during the last 3 years. Mostly investing my personal money, also sometimes organizing syndicates. We have not that much public syndicate of close friends and during this year we made about 4 investments. And my personal background is entrepreneurship in general. I've built SaaS company and then sold this to, at the time, a decacorn from United States, and together we went through the IPO process. And afterwards, I'm bringing back the experience of being entrepreneurship in Ukraine, raising money in Ukraine back to Ukrainian founders.
Fantastic, super. Thanks, Sasha. And Yuri.
Oh, thank you. My name is Yuri Romnyuka. I'm running the largest Ukrainian angel investment platform. We call ourselves iClub. So already co-invested 70 million across 93 companies and made 11 exits. That's gained 15 millions in returns. And the largest multiplier for exits is 22x. We did it last year.
Super. Okay. Very interesting and very experienced. So this workshop is designed for people who are interested in getting into angel investment. And I'd like to ask, after I remove the large cat from the office, apologies, where do you start? So if
Yeah, love it. Love it. Nice.
Yeah, it's like the James Bond movie, Dr. No.
Yes.
Austin Powers, that's me. So what are the kind of, somebody pitches to you and they're interested in investment, and I'll ask this maybe to all of you just to get us, and I'm sure there'll be very different answers, but where do you start? Somebody does a pitch, you're interested. What's kind of step one in terms of trying to find out, is this person plausible, or what do you need to know before you make an investment? Aidan, I'll start with you.
Well, what we normally do is each quarter we do a screening process. So we normally would look at about 10 to 12 opportunities. And from that, we would pick 2 to 3 that would present to our quarterly meeting. In that, we look at the deck, the company would present in quite a lot of detail. And then we would also do our own background check on the individual, on the product, and on the market. And if we then deemed them suitable, we would bring them to the members' meeting. So we would do a lot of work beforehand. No point in bringing something that's raw and that will be rejected straight away. So it pays to do the research work beforehand.
Okay. Okay, brilliant. A bit of research first. And Sasha, yourself, what would you kind of normally, if you're impressed with somebody, or how do you get to that first step?
So I have two different, absolutely different experiences of going through the process. From one perspective, very similar to Aidan's. Last year, I was very much engaged with one of Ukrainian syndicates where we did a process. We did a monthly review of different teams. Then we presented some of them to the syndicate members, and there is a great amount of the actual um, responsibility to present the team to the syndicate members. From another perspective, I'm very foolish investor in terms of like sometimes I'm just getting in love with the idea or the founder or maybe some great potential or something that I just want to observe and try to get into the deal as a personal I mean a personal investor, not having the team in the background. This happened to me more frequently than syndicate deals. I can talk about not the best practices of doing that.
We might come to that next. Yuri, I'll ask you the same question. Where do you kind of start?
So we try to treat our members in a very safe way. So we step in when the round already set. We have a lead investor. We have already second or third co-investor. So most of the time we're taking only up to 5% from the whole amount of the round. So we try to play very safe. But that doesn't mean that we not try to engage our audience with all the questions, because again, I don't think there is any stupid question or silly questions. There is only a question that you're not able to ask for some reason. So we try to engage as much possible clarification and as much possible attention from investors so they can vocalize all their concerns, all the questions beforehand. We'll make a decision.
Okay, great. And Sasha, actually, I was wondering about maybe common mistakes and if anyone has any interest or experience there at this stage, common mistakes or mistakes that maybe you've made that you think other people might make. If we can help people avoid them, would anyone like to share?
Yeah, I can start here with my largest investment that actually I had to kind of say goodbye to in general. And this was during 2023. I was very much inclined to be a participant in the defense movement in the country. I really wanted to understand how I can help the country, and it was very much emotional for me at the second. And the technology that I've seen, it was a land drone that I really liked, and I understood that technology is really cool, but I didn't actually do any specific due diligence about market demand for such of the things. And in the circumstances, how that happened is that founder was explaining to me that in general nobody understands how these type of different vehicles will be used in general in the field, but definitely there is an opportunity around that. So I bought into the idea. I understood that yes, right now flying drones is definitely something that gets more and more traction, and the deliveries are just growing exponentially. So probably participating in a land drone might make some good ideas come true. But unfortunately, even today, land drones is a different beast. It costs much more than any kind of smaller flying drones. For sure, there are some significant things that are flying too that cost really expensive. But in our case, any kind of land drone would cost significantly more than a flying one. And we got stuck in so many different bureaucracies when finally codified product was brought back to the military. And right now, this is something that is very slowly, I think, decaying in general. And the second thing that actually also I understood from the beginning, along with the founder, even the technology looks really awesome, but at the same time, you are not catching each other's phrases, and you like purely understand what each of you want to achieve, might result in very like low possibility to synchronize your thoughts and get to some market earlier. And this was always the case, but this was very emotional for me. And like the biggest lesson I learned: don't get with emotions into investments on the early stage.
Yeah, an important lesson, I'm sure. Was it a costly mistake, Sasha?
Yeah, this was my biggest investment to date, I believe.
Okay. Okay, cool. So, Aidan, what kind of factors do you think matter most when you're making an investment? Is it
Well,
market demand or?
I think normally when we see opportunities, the technology normally works. I think if I look back on everything that we invested in, the technology worked, I think, in 99% of all the cases. The market was there. The big thing that we made a mistake on was the team, and specifically the founder. We didn't do enough um, background information checks. We didn't do enough how the individual would interact with others, with investors, with other new team members, how they would share things. And I think if I look back, that was our biggest problem. And I think it's going to be a focus going forward. You know, the old saying, you can have a great product, but a bad leader, you don't go very far. So we need to put more time and effort into that. I think that's coming commonplace now with a lot of investors, and to see how good the CEO will be in working with other people and in driving the company.
Yeah, yeah, it's a tricky one to spot really quickly. Yuri, on that, in terms of balancing maybe evidence that you have in front of you, early stage evidence, and your own intuition when you're making a decision about investing in a company, how do you do that? How would an angel do that?
Yeah, we'll try to answer pretty short and briefly. So it's a discipline. If you are stepping in angel investment shoes, so you should not try to invest with different size of the checks. Like, the discipline is covered from the whole beginning. So this should be similar checks with different industries, so you can at least build some portfolio at the beginning. Then once you have this company that already make investment first, then you track whether or not they're raising next fund or next round. So you can co-invest and join first together with your syndicate for the following investments. And the goal is simple: to not try to be involved with one specific founder or company, whether or not they are super visionary or super great in traction result, but to build the portfolio first and then decide how you can put more, like, I don't know, the size of the check for the next funding round. In our case, we always try to educate our investors with even AI education process inside the app that we have. Through what we did, we try to show them that if you have the funding or money for investment this year, you should play safe, not try to, again, like put everything in one company, rather to split with a similar check with different companies, and then see whether or not these companies will have a more traction result for you, so you can gain interest to join first for the next funding round. There is no limits for kind of this play, but again, I think in a case of investors, you should understand that in anyhow, you have a risk to lose money, but the discipline that you are choosing, whether or not you want to be an angel investor, it's like must thing that you just need to build around your strategies that you just decide to choose.
Okay. Okay, great. So everybody probably has a slightly different way of doing this. I might ask you all for like a short example or a story of what you found the best way to support a founder is without micromanaging them. What has had the best return so far, in terms of when you've done the due diligence, you found somebody you like, they're starting to move forward. What does the support look like after you've made an investment? I'll start with you, Sasha.
Thank you, Georgie. So, from my personal experience, although I'm saying that emotions not helping with investments in general, but investments are like very much relationship and like personality-based business, because now you are getting married and now you're in one boat for extended period of time, which means that usually it's some kind of a verbal contract about the support that is needed from startups. I usually invest on very early stages, and we somehow explicitly try to communicate with the founders about what is the need for their personal support. And specifically in case of the syndicate, this was more of mature companies, which generally, like, I didn't feel that I would provide much of the value, even being a lead investor in the syndicate. But in case of these more of a smaller ventures, early stage startups, if there is a chemistry, we would try to schedule meetings on a monthly basis where we would touch base on the different stages. And you are always bringing, like for me personally, I always bring potentially this one step ahead kind of understanding about what to happen with the actual project, and kind of bring on my experience what would be the best decisions in the current circumstances. So that's always the right thing to ask: how can I be helpful in the current stage? Is there anything specific that has happened? And the story that I had recently, about like 6 months ago, the biggest value that I brought to the actual founder is that just traveling, we kind of synchronized our schedules and spent about 4 days together in one car, and that allowed us to kind of plan the growth of the startup for the next 6 months. And it actually kind of grew 2 times in revenue and about like 4 times in a team size, which was very significant result in a very short period of time. And this was very much to those conversations we had together. So it's very much about the chemistry between you guys. It's about like asking the questions, especially on early stages. It may be even over asking the questions and being what are you doing right now? What are the next planned steps? Because sometimes they would just maybe get stuck and not sure if they can access you, or maybe they are somehow feeling shy and they don't want to come back to you when they don't have significant results, although the results are always results, no matter are they significant or not. So this personal connection is super important for me personally in this kind of relations, and asking the questions. That's always the right thing to do with the founders.
Okay, great. Aidan, I'll come to you next. What's the best way that you found to support founders once you've decided to invest in them?
We would be a bit more formal in that every investment that we make, we put a person on the board. We insist on monthly board meetings and board packs prepared in advance. So our representative on the board would be constantly in touch with the CEO, would have weekly calls normally with the CEO. And then every 6 months, we would get the investee company to present to our members in general to update them. So they would then have an opportunity to network with other individuals. And if we feel that, somebody needs help, we would provide that help, whether that's in marketing or in sales or tax or whatever the case may be. We bring in somebody to help them. So yeah, there's always a helping hand there to guide them. But as we get bigger and we now have a portfolio of 30 companies, it's extremely difficult to do really close involvement with them other than through formal board meetings.
Okay. And Yuri, the same question. I know your business model is slightly different. You might have more companies as well. How do you find the best way to support the founders?
As a small co-investor, we not try to, of course, waste the time of our founders, so they can precisely do what they are capable to do. And with a proper board that they already have, we're not taking board seat. We're just taking these meeting notes from the board as a reporting part for all our investors and angel members. And we're playing this very safe, but on the value side, what we can offer, we have 3,000 venture capital fund that we already have story behind. So again, once we see that the company inside our portfolio has already started to do something properly with the next fundraising part, we know that it's already something cooking. We easily introduce them to our network of the VCs in the US, in Europe, and that's helped them a lot because again, as a story builder, we want definitely to help them to succeed, but in a way that they know how to treat well the industry or business model that they choose.
Okay. Brilliant. And I think this question is probably angled at Aidan. We had a question come in the chat there, and I think it's in reference to maybe the biggest mistakes was around the team and the founder themselves. So how do you assess the team or founder to find out if they're worth investing in?
With great difficulty, but we challenge them, I think. And I think, we try to put them in a situation of how they would react to how difficult the negotiations go when we're doing the DD or when we're doing the legals, right up to the moment that we sign, see how they react. That's one. We also would have situations whereby we would do background check. We would talk to former colleagues. We would talk to former employers, and try and gain as much knowledge as possible on the individual. It's always a tricky one, right? And it's always going to be difficult to ascertain. But if we get it wrong, then you really are in trouble with a company if you have a pig-headed individual going ahead and doing their own thing, and who will not listen to take any advice or anything like that. So we normally as well make it clear when we invest to CEOs that, there is what we call a reverse vesting clause in there that, they can be removed. And if they do, then their shares can be taken back at a very low value. So it's in the interest of everybody to stay motivated and to discuss, but it's a very difficult one. Okay. And we've got it wrong a couple of times to our cost.
And there's another question, kind of a follow-on maybe, which is, what's the criteria for an angel investor to become the lead investor, as due diligence available for product development is limited at early stage of the startup? So is there specific criteria?
Normally it's the dog with the biggest money is the dog that becomes the lead. They normally then would dictate the term sheet, but they would work obviously with other potential investors, getting an agreement on the term sheet. But it's the lead. The lead is the person with the biggest money normally in the deal.
Okay, great. Sasha, you said that one of the things, no, it was Yuri, you said one of the things that you'll do is to start to introduce your startups into your network at a certain point.
Yeah.
And when do you decide that? Is there a magic point that you're ready to do that?
There is no magic. It's only, again, discipline that we try to follow with. Once we have in several examples, again, with startup that end up with a write-off, and we definitely don't want to play the game with introduction with those who are not so well performing, because again, it's our reputation with all of these VCs. But we also have, for example, the company Berry Street that went from seed stage to Series B in 18 months, like 1.5 years, and they already raised Series B with the proper VCs from North America. We help them a lot with introduction as well. And in case of this particular company, from the beginning, it was clear that the founders precisely knows well what they do and industry what exactly needed. So they are visionary in terms of what exactly happening, and it helps a lot us as well. From the beginning, there was quite a clear angel investor that also lead this funding round that was specifically from industry with significant exit with unicorn status company. So that's plays a lot of satisfaction in terms of what we get as a result right now on the cap table. And we definitely want to see more like this example, because in our business, as you can see, reputations matter. Like if you are trying to play the game unsafe and try to sell something that you're not so clear about or you're not so confident about, that gets you a lot of problem and further. That's simple.
Okay, so with just a couple of questions left, I'd like each of you to tell us, if somebody was making their first angel investment, somebody here is in this virtual room thinking about making their first investment, what would be your number one piece of advice that you would give to them?
I would recommend a walk-through syndicate. That means that they can share the DD, they can share the knowledge, they can work with other people. It's not a lonely journey, and sharing the workups.
Great. Okay. Brilliant. So join a syndicate and you can kind of lean on people for support and you're not on your own in the risk.
Correct. And syndicates have experience in doing the legals, experience in doing everything. So you're coming part of that, but you learn as you go along and you also spread your investments over many projects.
Okay, brilliant. Sasha, what would be your number one?
I definitely agree with Aidan, especially doing early investments, and especially when there are emotions that drive you to do the investment. Being part of the syndicate, or at least involving somebody else with a cold head, would allow to do a better due diligence on the early stages. And the second thing, even if you already decide you want to do this personally, then there are two things to pay attention to. One is traction. So the company is showing that they have customers, they're selling, they are able to actually do something. It's very risky to do this pre-product, especially in the current days when any kind of vibe coding tool allows you to build MVP during several hours. And the second thing that is important, it's again, having the chemistry between the founders and you personally, and you understand. And the third thing, the opportunity of the market. The best growth of the actual project that I have seen in my portfolio was with really unexperienced founder, but at the same time with the actual opportunity that was growing. I didn't even know that, but guess what was that? It's artificial intelligence 2 years ago. And I just wanted to see how that would evolve. The ticket was pretty small, but the growth was exponential 2 years. So that's always three things to kind of watch out for. Traction, possibility to sell on early stages. Second, it's the chemistry. And the third one, the opportunity of the market.
Okay, fantastic. And Yuri, what's your top advice?
Yeah, thank you so much. My top advice again is discipline. We try to also follow the same curriculum inside our team. So we do every Thursday calls with our founders that we are showing the potential opportunity for investment, so they can ask questions. We're also doing this reporting part that we are sharing every quarter through the app. We also add in as much as possible information for our investors and sharing these newsletters every time at the last day of the month. So we trying to build this discipline and again, suggesting our investors to also follow the same route. You need to secure time in your calendar, like 2-3 hours a week at least, to review the company that we are showing. You should also follow any same decision to not just split up the ticket size and get more and more involved with some companies, rather it just already exists in portfolio. And just follow these discipline rules that get you leverage your risk factor in terms of how exactly you can build your precise portfolio that you are able to gain a lot of traction with. So again, it's almost end of the year, and the last, what I want to share as an idea, just to you need to understand that angel investment it's a separate job. So you just need to understand that it will be not easy path. It's not just easy ride, and you just need to follow that precise planning. That if you decide to step in, that will be my commitment, not just for 1 month, not just for one deal, probably for the next several years. Okay, to make it clear that I just already have some result on that regard.
Okay, and I'll wrap up with a last question that the audience might be wondering about, and be as open or closed on this as you like. I'm not forcing anybody, but I'd be really interested to see on that risk, maybe starting with you, Yuri, in your own personal experience with angel investment, can you give us a kind of a ratio of what's worked so far, or whether you want some metrics around your investments? Is this something that it's not an easy job to get into? How rewarding is it?
Yeah, so to be honest, my own personal portfolio right now showed me 1.6x to amount that I invested in already. But it's not so crazy number that potential everyone will try to applause to me. But again, like what I'm trying to follow with this exercise, that I'm committed as my personal money to put in, and definitely trying to choose not with thing that's quite, I don't know, fancy right now, like AI or meal tech. I'm trying to also follow the idea that I should build precise portfolio that will be diversified in terms of regions, like geographically, like not just in Ukraine, but probably like you can also identify company that can easily scale to Europe and the US. It's exactly this way. And of course, the pillars of the industries matter, because you know that sometimes regulation in specific industry can change everything dramatically. So we trying to also, and myself, of course, I'm trying to also split these two diagrams in one chart, so I can have at least the exposure for the proper companies, and then trying to help as much as possible new investors. And our goal here is simple. We will definitely, with your help, with Seed of Bravery, we'll see a new generation of angel investors. And we already see that. And our goal is simple, is to have not just invested money, but also return money with results, with exits. And in my case, it's exactly the same goal.
Okay, great. And Sasha, you've been investing for about 3 years, I think, as an angel investor. Have you got kind of any rate of return or any experience just to give people an example of how it could go?
Yeah, I think I got one lucky ticket specifically with one project where there was no exit expected, and we talked about specifically other options rather than waiting for the company to mature and be sold or like exit. Now we talked about revenue share from the early stages, and actually one company already returned all my previous investments. But like this is a very lucky ticket, and I cannot advise this to anyone because, again, from my personal understanding, investing in startups in technology is very similar to gambling in general, because there is not much an opportunity. And for me, the agenda to start investing in startups a few years ago was specifically to support other young entrepreneurs and maybe spend the money without too much thinking about the potential return. And that's, I think, very important to understand, that you cannot select if you want to invest in index fund, S&P 500, versus you want to invest in technology startup, because the risk profile is completely different.
Okay, absolutely. And Aidan, you're a seasoned investor. You've been at this for a while. Have you kind of an average in terms of your successes over the years? Is it still like gambling? Is it a worthwhile career for people?
Oh, I think it's very much a worthwhile career, but it's still gambling. Our return to date has been 3 of the 8 exits we've had. It's been 3 times, but we've had one major failure, which is a major cost to us, whereby we went into a market we really did not understand when we look back in it. So, but also we would have got out too early in some of these cases. If we stayed in longer and put more money in, I think we would have got a better return. So now we're staying in longer. We're following our money 3 to 4 times in. And so I expect that our return will go back up to 5 to 6 times in the next couple of years.
Excellent.
But still gambling.
And like that, I suppose it's not, and especially for people investing in the Ukraine ecosystem, it's not all about money for certain. So we know that, but it is also your money that you're putting in. So important to ask. Thank you so much, gentlemen, for joining me today and for sharing so openly. We're going to invite our next speaker in, but for now, thank you so much, and we'll speak again soon.
Take care. Bye.
Thanks, guys.
Thank you for the invitation. Have a good luck with that.
Thank you. So Anna joins us from iClub. So one of Yuri's colleagues. It's lovely to have you here, and I'll let you carry on with your keynote. Thank you so much.
Thank you very much. If I can share the screen, that would be very helpful.
Absolutely, Fionnuala will give you access.
Yeah,
right.
I already have it, so yeah, I'm already ready to go. So thank you very much for inviting me. It's a pleasure to be here. I'm just there was some change in the schedule because I had to finish first the due diligence call with the dev call with our portfolio company that we are presenting today in our syndicate. And now I'm here talking about due diligence and portfolio management. I have only 20 minutes. It's not very much, for these two very, very important topics, but I hope to give you at least some overview that would give you understanding of, what is important to remember about when you're looking at the investment opportunity and when you're then, after investing in, looking into building a strong and sustainable portfolio. So, just very quickly about myself, I'm a managing director at iClub, and I have more than 18 years in venture capital industry. So I'm both kind of, mentor, advisor to startups and investors, angel investors, and I really like this combination. So why due diligence matters, and I believe it really does. And during my career in VC firms, I've been doing due diligence a lot on companies, and I love this process. I think that's the process that helps you to understand the company really well and understand the founders and many specifics, and actually build your knowledge around the industry. So why it exists? First of all, to protect your money, right? Because of course, venture asset is very risky asset, and like a gentleman mentioned, gambling. It's very much so. And some of our investors, they say that, well, they are just writing off the money they invest in venture, and then it's just a very nice surprise when they get the exit. I'm not so pessimistic about venture capital, but still I understand the sentiment. So of course, diving deep into the company and understanding all the specifics helps you to choose a better investment opportunity, and it helps you to reduce avoidable risks, right? Because we should understand that there are some risks that we can't foresee. Everybody read or heard about Black Swan, right? So it happens, and like situations like pandemic, like war, and all these things, they affect the market a lot, and we can do nothing about it. But there are some things that we can actually understand and be aware of while investing to the company, and we should as investors. And of course, it helps to understand the real business, not just a pitch deck, beautiful slides that the founders have prepared. Because some founders, they are so great in selling and selling to investors as well, but it's always important to get to the core, and due diligence helps you to do that. So what is the framework, right? I would say that there are like 4 key areas that you have to check despite the stage. It doesn't matter whether this is an early stage company or this is the growth stage company. It doesn't matter. These like 4 pillars are important. They are affecting the success of the company. So first of all, team, right? That's the main asset, especially early stage when there are no other assets actually in the company. But nevertheless, during the course of the development of the growth of the company, team is important, and the composition of the team, I will talk a bit more about that. Market, of course, you need to understand that, even if a team is great and the product is nice, if there is no market or the market is closing, you won't be able to get the profits you would expect. Product and tech, and here just a very short remark, you don't have to be a tech person to be able to understand whether the tech and the product is good or bad, or etc. And of course, financials and legal. Even early stage, there are first signs of whether the team is able to kind of, use funds and keep track of everything and be smart about money. And just a couple of additional things. So on the team, we look at the founder market fit. it's really important because, once I was kind of claimed as a person who doesn't support very young entrepreneurs when I provided the feedback that if you're entering an industry, you should definitely have some experience and knowledge of the industry to be able to conquer the share of the market. And yeah, I really know some young entrepreneurs that are successful, but I still consider that to be an exception because usually the companies that are a large success, the companies that reach the tops. So these companies, they are built by the people who know that what they are doing, right? So they know what they are doing in this particular company. Of course, motivation and execution history. The founders, they have to deliver. That's important. And if they don't deliver, it doesn't matter how much money they have or how much support they have from investors, nothing will happen, right? So it's the founders and the team's part to execute. And of course, the complementary of skills. It's very important whether the composition is right? Whether every important skill is covered, or there is a plan how to cover this skill. Because at the beginning, it's very difficult to have every single important role covered in the team because there is not much money, etc. But there are advisors, there are consultants and supporters that can help you at the beginning, and then you can grow the team accordingly. But still, there is a set of skills which is crucial at the beginning, and having an understanding of how you cover that is really important. As for the market and product, of course, the crucial is the problem real. Like today, it's still it happens when somebody is just building something because they think it might be a good idea to build that, and that's definitely not something you want to support as an investor and not to put your money into. So there should be a huge problem or a huge demand from a large portion of audience that is able to pay for the solution. And then this makes sense. Market size, as I mentioned, it's important that the market is existing and it's growing, right? So the growth trend is everything, and like the potential of the market is important. Early traction signals. It doesn't mean that like only companies with revenue should be considered, especially when we are talking about angel investing, which is to support companies on pre-seed seed stage when they might not have any traction in terms of revenue. Still, there might be traction in terms of users, or some communities that the team can build as a first step of their go-to-market. So these early traction signs are very, very important because they show that the team is able to do with the very limited resources. And of course, competitive landscape. Having no competitors, if there are no competitors, so there is a sign whether nobody has looked well for competitors, or there is no market, right? So if there are competitors, good, it's a good sign. But it's important to understand who are these competitors and whether there is the opportunity for another company to join the market and get their niche or their portion of the market. So that's good. But trust me, those investors that are kind of looking at the company say, oh, but that's a second, like there is a kind of another big company that is doing the same. That's not the point. Still there is space, and if the company is able to find their niche, to find and build strong and sustainable unit economics, that's the sign that there is a place for this company as well. And financial health check. So the company should be able to provide you with all the information which is actual, if they have any, or with the very transparent and clear projections. So any stage, despite even if it's like pre-seed and there is no product and there is no like traction, still projections are built on assumptions. And if the team is not able to build any projections, I'm not sure they will be able to use the funds properly. The company should understand what is their stage. They should be aware of it, and they should be aware of what should be the burn rate for the stage, right? And they should know for how long they can run with the money they are raising and whether this is sufficient for them to get to the next milestone. Without this very important understanding, they could be just, burning money, their money, your money, and resources. Cap table clarity. So it's important to know who is on the cap table and whether you want to be on the same cap table. And of course, like everything around legal. I always advise startups that one of the things they should never be where like I don't want to spend money, etc. So legal consultancy and legal expertise is very important, even early stage, just to understand what should be there, how you should work with your co-founders, how you should work with your team, how you should work with your clients, with investors, etc. So all of this is very important, and it should be documented and documented properly. If it's not there, there might be problems later on that might be very damaging to the company. Portfolio management. So we've decided on the investment opportunity. We've done the check. We believe in the company. We think that the team is great. We have all the skills required. We have a great product. We see the first customers using it and even paying for it. Maybe the money is not like huge amounts, but still we see a very positive trend and trajectory of growth. So the market has great potential, and so all the kind of check boxes are cleared. And what do we do after we invest in the company? Do we do anything, or we just we wait till the company announces the exit? If you want to make sure that this investment is successful, you would better do something about your portfolio, and you would better manage it. Because in this way, by managing your portfolio, you would be able to understand and foresee good signs, bad signs, and understand what to expect. So of course, how do you do that? There are standards in this industry. This industry is already kind of standardized, right? Like it's not wild west like it was, and now more and more founders and more investors have understanding of what is kind of best practice. So best practice would be reporting from founders. And the regularity might be different, and you agree on that together with the team, depending on the product, depending on the industry, on the vertical, on the business model. So there are many factors that affect how often it makes sense to share the updates. So it might be monthly, might be quarterly, or biannual or annual, but it should be there, right? And in these updates, you should see the key KPIs, the main updates and insights, asks, of course, from the company, red flags or, some risks that arise. So all of these should be kind of, safe space where founders can feel, comfortable to share everything with you, and then to get support and feedback that they ask for. Or even if they don't ask for, and you see that you can help somehow, it's good to have. Sometimes founders, they hold the calls. Again, they might be quarterly calls or annual reviews, depends. And of course, it helps you to identify the risks, right? So to see the red flags and follow up on that and understand where it's heading and whether it's still possible to help and to bring everything to the good track, or it's not possible anymore. How you as an investor could add value, and you just remember that becoming an investor, you're becoming a shareholder of the company, right? So you are interested, as well as founders, in the best outcome for the company. And of course, adding value is a kind of part of this role. And like some of the things that you could add value with would be, of course, fundraising support. As an investor, you have relevant contacts and relevant network, but any strategic help, because usually when you are an investor, you already have some background and you have some expertise, you have some past that you could, also use for the good of the portfolio company. Anything with introductions or hirings, etc. So all of this usually comes from the network, and investor network is very important part of it. And of course, everything related to the next round. So as an investor, you are very much interested in the next rounds. Why? Because every next round is an opportunity for an early investor to exit, right? So like when you invest, the next round is already like the first step towards your exit, because it's not always the way like till the IPO we are all together here, because there are opportunities for early stage investors to exit company using secondaries options, and founders and the new investors are also interested in that because they want to have a clearer cap table, and the opportunities are there. You just need to be there so to see them, right? And of course, knowing on a regular basis, like being hands-on, not intruding into the company, not kind of coming in and doing everything that you are not asked for, but kind of supporting from safe distance and providing help when needed. You can actually understand what would be your follow-on strategy. Do you want to double down on the company in the next round, or you don't want to do that because you don't see the potential, or you don't have the capital available, etc. So for every investor, there is always the opportunity to execute pro rata, right? So that their shares are not diluted with every new investors coming in. And being there, you will know about this opportunity and you will be able to execute your pro rata rights, which we always advise to do, unless there is some situation, then you see no point in doing that. But if you are with the company and if you're supporting it, usually the amounts of like the pro rata is not the large amounts, unless you're getting to the later stage when they might become larger amounts. But that's another thing that should always keep in mind, because when you invest into the company, you should consider a couple of things. First of all, you should consider what is the check you want to invest today. Second, what might be the check you would want to kind of reserve to follow on into the company. But also keep in mind that later on, with new investors coming in, you will have this pro rata and you have to have the money reserved, the capital reserved to participate in that as well. So what I want you to take away from here is, first of all, that due diligence is really the process that focuses on the core, right? It's not about this buzz, but it's on important things. Of course, best returns, they come from very disciplined approach, and when you see a star, you want to double down on it. You want to increase your shares in the company, and when you want to get more profits. Of course, when you, as I mentioned at the beginning, when you manage your portfolio, so you kind of protect it and you help to grow the value, and of course. Investing, it's not about emotions. I just like I liked this speech. It was very nice. I will invest 50K, or I like the founders. They are so great. I will give them like, I don't know, 100, etc. So it doesn't work like that. Emotion is important. Like chemistry, I would say chemistry is an important part of the whole relationship. And if there is no chemistry, so better not to invest. If you don't like founders, for example, if you don't like something, so if something kind of smells for you, so of course no, then it's not it's a no-go. But don't make the decision just from being kind of in love with the team or with the product or with the pitch. Try to get to the ratio, right, and make the informative decision. Just a couple of words to finalize about ourselves. So we are iClub, and I don't know whether Yuri has mentioned it. So we are a global community of 5,000 angel investors from 42 countries, and we are powered by TA Ventures Fund. So we have both, very strong expertise in venture industry, and we are on the mission to democratize venture investing and to make it accessible for everyone who is interested to diversify the investment portfolio. And to do that, we built a very, I would say, very modern product, financial product that helps our investors to register easily, to get access to deals easily, to go through QIC and all the processes, signing documents, paying invoices, etc. We've integrated automated tracking so that investors are aware of what's happening. As I mentioned, they are able to manage their portfolios by reviewing the reporting and following up on that. And we have a minimum ticket of 5,000, which is very democratic, I would say, helping for more investors to be part of it. So our results say for ourselves, we are really here to bring value to investors and help get exits and returns. So strong partner in TA Ventures, which bring us the deal flow, which is the crucial for any syndicate. And these are the companies that are in our portfolio, and we are very, very happy to have them. My name is Anna Magiera. I'm always available for conversation about investing. And thank you for the opportunity to talk about due diligence and portfolio management and about us. Thank you very much.
I think it was going to be a very interesting chat with three very different founders, very different companies, different industries, but all at a relatively similar stage of development. And the thing that they absolutely have in common is they've all managed to raise investment, at least one round of investment, and in some cases a couple of rounds of investment in the near past. So we want to just maybe flip things around a little bit. We've all of this investor literacy program has been focused on new angel investors or would-be angel investors and trying to bring their knowledge levels on what angel investing is all about up a little bit. And there's been a lot of discussion today about due diligence, decision making, how individual angels make decisions behind the scenes. And in the earlier workshops, we spoke a lot or heard a lot from angel investors and syndicate heads about how the benefits of angel investing to individual startups. So I think what we want to do is just flip it around a little bit, and we're going to see from the startups' point of view who have received the angel investing, has some of this, what's that journey been like, and has some of this actually followed through in terms of the benefits of having angel investors on your board beyond just the cash that they provide to you. So that's the kind of context of it. I'd just like to say a welcome and a thank you to Andrew, who's joining us from Field Tech here in Ireland, Yulia, who is joining us from Ukraine at the moment, and our company S-Lab, and Irina, who is the CEO and co-founder of Bank of Memories. So what we might do, maybe starting, Yulia, with yourself, is just give a quick intro to your company, the kind of problem that you're solving, and what your solution is to that problem.
Yeah, hi everyone. Absolutely happy to be here, and sorry for my voice. I got cold a little bit, so under the weather. So at S-Lab, we are producing sustainable packaging material to replace polystyrene, this white, squeaky, harmful fossil-based material. So we mainly work with the packaging, and we developed our own technology, how to produce this material at the industrial scale, and now are at the crucial point of scaling of our business model from being a provider of the packaging to being a provider of the technology. That's kind of a quick intro, quick pitch on us.
Excellent. Yeah, we'll come back to you on a little bit more details on that. So Irina, yourself and Bank of Memories.
Hi, Larry. Hi, everybody. Thank you for inviting me again, the second time already during this program. So Bank of Memories is a platform for family memories and assets that we are passing on to new generations. And our technology is unique because even if our company will not exist in 100 years from now, even though maybe state will not exist, your data will be still safe. And that's a unique patent pending technology that we are developing. Currently, we are already having a couple of small products that are generating revenue. And we were angel invested in the very beginning of our journey when people just believed in me and my husband. We are doing it together. And many people say it's a red flag, but I'm fine with that.
It's interesting, actually. We had a syndicate meeting yesterday, and one of the comments back was some reticence from the angel investors in investing in couples. So it's good to see that it does happen. So Andrew, tell us a little bit about FieldTech.
So yeah, we're an Irish-based company, and we're developing connected health technology for monitoring compression therapy. So compression is a very simple form of treatment, applying pressure to the body, and it's used in a lot of different indications. In fact, it's been used for thousands of years. The indication that we're targeting is venous leg ulcers, and despite the length of time that compression has been available, it's never been optimized. So there is a big challenge in trying to apply the correct amount of pressure that you have an effective clinical result, but you're not applying anything that's too dangerous. So our wearable technology and digital platform is designed to ensure that you're consistently applying targeted compression for the individual user's needs. And we then use that to tailor treatments and improve healing outcomes. So that's our company.
Excellent, Andrew. Thanks for that. And so it might just stay with you. I just want to give everybody a flavor of the type of investment that you've raised so far. Is that you're on your second or third round at this stage? So you might just give an idea of the amount and generally where that investment has come from, the breakdown between VC, angel, etc.
Yeah, we started out as a university project. So we actually had investment initially from a state agency, Enterprise Ireland, as part of a project within the University of Galway. And then after 2 years, we spun out in 2020. So it was not an easy time to start a company in 2020. But we initially had accelerator program funding. So we worked with an agency here called the National Digital Research Agency. And so we worked within that sort of accelerator, got a little bit of funding from that. We got a little bit of grant funding. And then in 2021, we got our first angel investment. And so it was more sort of high net worth individuals and a combination then with the state agencies that invested in equity, but would only come in with the private investments as well. And then in 2023, we had our first angel syndicates investing in us. So we had let's say, 3 different Irish-based angel syndicates came in. And again, we had some state agency funding to match that angel investment. And then just recently, we had an extension investment that was from our existing investors, and a couple new investors came in on that as well. So mostly like angels, high net worth individuals. We haven't had any VC funding yet.
Very good. And do you want to share the kind of quantum of investments to
Oh
date
yeah,
or no?
sorry. So yeah, our first investment combined was 1.2 million. Our second investment was 1.8, and then just recently it was 1.5. We've also sort of been able to secure non-dilutive grant funding. So that was a 4.6 million consortium grant, and 1.3 million came directly to FieldTech. That was outside of the university project. That was like, as FieldTech as a company. So yeah, it's kind of maybe 1.3 million grant funding, and then just over 4 or 5 million for private investment.
Yeah, very good. But that's very typical of medical device. It's pretty capital hungry at all stages really, but especially at the
Yeah.
product stage.
It's probably kind of low for a medical device company, to
Yeah,
be honest. Like people
yeah,
would raise more than that just in their first investment for medical devices quite often. So
yeah,
yeah.
yeah, absolutely. And Irina, just to give us some color of the initial investment round that you raised and who did it come from?
Yeah, so we had $500,000 as our pre-seed round, and we are fully digital, so there is nothing like a device there. So we actually did not require more capital to do things that we had to do. And we had 10 angel investors, and later on, we also had a family office from Denmark investing, and also we received grants from L'Oreal and a couple of other funds, including Seeds of Bravery, of course.
Yeah, yeah, okay. That's interesting. Just to stay with you on that. So 10 angels initially. How did you make connections with them? Were they people that were known to you, or how did they get into your network?
Well, most of my investors, they are family people, they have kids, or they suffered the same problem that we did. We lost a lot of information after my mother-in-law passed away. So a lot of people that connected to me mentally and emotionally, and those who, first of all, knew my friends and they've heard about this project, or they knew me personally, or they knew my husband personally. So that were these kind of people. We did not, run around the city with some ads like invest in us. So it was a very close circle of people. And then that family office, they just met us accidentally at the conference, and they were excited because the founder and the owner of that fund, he has 3 kids and 6 grandkids, and he said, "Yeah,
I
let's do
can see
it."
that. Yeah, yeah, yeah. Okay, so a lot of initial connections are easy to emotionally tie
Yeah.
in with your
And I'm
solution.
coming from the background, so I know investors. So my first job was basically I was working for an Irish investor who was investing here in Eastern Europe, and
Okay.
all my life there was a connection to tech or investors. So I do have
Okay.
background in this.
Good, good, good. So you had some inside information on how all of this investing works.
Yep.
Very good. And Julia, to speak a little bit again about maybe a little bit of a hungrier um, startup for investment in your case.
Yeah, so with our first pre-seed round, we did raise 1 million euros in total. 70% out of that was private investment, 30% public grants, and again, including Seeds of Bravery program. And this 700,000 euros, even though technically we do have 2 VCs on our cap table, but even those 2 VCs, they do consist of business angels. So I would say that our first pre-seed round largely consists of business angels, even if it syndicates. Well, I think we have all of the possibilities. We have individual business angels, we have syndicates, and then we have a VC who is essentially also the syndicate of a couple of business angels who just collectively put the money together and they put together a fund and then invest. We also have a couple of accelerators on our cap table in the pre-seed round. So that was closed early 2024, and now you're raising seed round with one of the investors who already came into the picture, the Morgan Stanley, very institutional and very well-known name in the investment. But this also kind of marks the difference between the first round that largely or fully consists of business angels, and now we're looking into the VCs because obviously the goals are different now in this round, and the amount of funds that we are raising is also very different.
Okay, let me just stay with you there, Julia, on this, and just talk to me about the connections again. The initial round, how did you make those connections, and even the follow-on round and the institutional guys? Because that's such a difficult thing for startups to get right. It's one thing to make a funding strategy, but it's the next thing, how do I actually execute and make those connections?
Yeah, I mean, to be honest with you, when we started fundraising, we were not as experienced as we are now and as seasoned founders, even though there's so many things that we still need to know. But at that time, we were trying to talk to as many potential investors as we could, and we did not really separate whether we want to talk to angels only or to VCs only. We basically were talking to everyone. And I had in mind that, well, I should talk to those who have at least something on sustainability thesis, well, in their thesis that they invest into sustainability. But at the end, these business angels, they were not my close circle or anything like that. Contrary to the case with Irina, that she knew some of those people, but in my case, it was just mostly meeting those people through conferences, through relevant events, through networks. There were several introductions that were made, and we got into accelerator Techstars, let's say. And for example, what Techstars did is that they did help us to raise one of the tickets by launching a campaign for us among their community. So they did reach out to alumni of Techstars, and Techstars is a global accelerator, so obviously they have a huge community. So they did reach out to their alumni and to the mentors, and the network of the mentors is also quite big there. So they did help us to raise through this kind of campaign that they did launch for us. But yeah, it consists of business angels again. So this was mainly like, just proper fundraising, business development, where just meeting different people, talking to different people. And eventually I understood, well, that, it does make sense to do the first round with business angels, as they are much more involved. They literally are there to help with anything we need. And I'm still going for anything I need. And like, we do have some of the investors who built the business model for us, who did the introductions to other investors. And just, this is kind of, I would say, my unpaid team in that sense. I don't need to pay them, but they are very committed and ready to help as much as they can. And by the way, Sasha Rimini, who was on the previous panel, is one of our business angels investors.
Okay, I didn't know that. Yeah, very good. Well, that's lovely to hear, because we in the earlier workshops on this investor literacy program, we spoke a lot about the benefits that angels can bring. So it's great to hear that it actually comes true in these cases as well. So that's great.
And I'm happy he didn't say that we were his mistakes. That was a success.
Yeah. No, he seems like a particularly good angel to have on your cap table. So that's great. So Andrew, when we come back to yourself, like we spoke a lot in today's session, particularly about the kind of process for the angels go through, or investors go through, to make a decision, in terms of follow-up discussions, in terms of due diligence, etc., until the cash is in the bank. So what did that feel like from your side? Was that a never-ending process, and you're just waiting for the cash to land here, or does it go relatively smoothly? Just what's your experience been like?
Yeah, it takes a lot longer than what we hoped anyway. I don't know. We had expectations that it would be like quite straightforward. We had a very detailed, especially in our kind of seed investment, a very comprehensive due diligence process. And that was just because the lead investor, the lead syndicate, they had an extremely detailed due diligence document that we had to put together. The benefit for us is that it's meant we now have a very strong data room. So we've tried to maintain that over time, and any new potential investors, we just say, here's our data room, and it's just an update of what we set out in the very first investment, the seed investment.
Okay.
I think that the due diligence takes time, and it's an anxious period, but to be honest, like, it's what happens after that that takes even longer, and it's all the legals. We just found that the legals, it's like it's been done for the very first time every time. Like, it drags on and on and on, and it's hard to understand why. So you need patience on both sides. I think, like, we obviously can't control things, but we also know that, like, the investors are trying to bring together everybody, and getting signatures, getting approvals, it just takes so much more time than what you think it might.
Yeah, absolutely. And the downside of all of this legals is you're paying for it
We pay for
in
both
lots of
sides.
cases. Yeah.
Yeah, exactly. So when it all goes through and like it's a happy day, quickly, some of it goes back out again because like
Yeah. Yeah.
you're paying for your lawyer, and even more expensive, you're paying for the investor's lawyer. So
Yeah, yeah, absolutely, absolutely. So, Irina, in your case, was it something similar, or maybe a little less formal in your case in terms of getting through follow-up and due diligence and money in the bank?
So with those angels who are from here, from Ukraine, we have very clear and open databases where they can check nationalities and how many percent every founder has and all of that. So it was easier. But when we talk about international investors, they always asked us for like 20 pages document to and ethics, and so that I'm promising that I'm not lying to them, and a lot of this paperwork. So it was a little harder with them, but because we already had the data room and we always had it from the beginning, so for them it was kind of enough information from us.
Okay, very good, very good. And yourself, yeah, Yulia, what was that process like for you?
I feel like that, it was one of the things that you kind of do and try to forget because I'm like trying to remember what was it like, because the most recent memory is of course the due diligence with Morgan Stanley, which was brutal. I think it was 2 months for us, for two people in our team, almost full time doing all of that,
Yeah.
because basically they ask for all of the information, every single detail. And then when I think about Business Essentials, I think it was not on the legal side or like on a official kind of document side. For us, it was mostly, walking through the business model, our assumptions. And again, we also had a data room ready. So we did have proper pitch deck. We already had the business financial model. We had assumptions. We had some market research. So basically, we did a lot of prep work, and that's the biggest, I think for every founder. Before you start fundraising, you need to prepare the data room, and it can change while you're doing the fundraising because you also gather some of the feedback. And that also was an interesting thing, that as we were going through the due diligence, we were getting some of the feedback and some of the advice that you should do this like this, and you mark or improve this, and it did help us to actually go through due diligence to move forward to the next investors. So I think as any investor, there is this concept of 5 T's and 2 P's, and I think that's what our due diligence was mostly with those business angels. Or 4T, well, it is 4 T's or plus 1 P, or 5 T's plus 2 P's. It's like basically all of those TP, but what it means that they are looking into the team, technology, traction, total addressable market, and timing. And then P obviously stands for problem or end product. So if it's like the whole concept. So that's what I think, that is what it was for us about, to kind of make sure that we clearly have all of these T's and P's explained, and that we can show how big it is or how potentially it could be big, because I think that's also what investors are looking for, the ambition. And of course, at the early stage and with Business Angels, it's mostly about relations. And if investor can relate to the problem that you try to solve, if they relate to the team, of course, to the founders. So I think it was not as legal, more like, just let us discover your business and what you want to do. It was more on that side.
Yeah. That's interesting that Morgan Stanley, that this is a high-end investment bank, so the process there is brutal, but I think that's going to stand to you in the future for an exit process, or understanding what the requirements are at that stage. So every cloud has a silver lining, I think, in this case, And then Andrew, just come back to you as well here in terms of, and we did speak about this in the investor literacy program, about certain expectations that investors have about communication after after the investment happens and how you update them on a regular or semi-regular basis. Was that something that was put in place in your case, or how does that communication work with the investors after the money's in?
Yeah, so like as part of our investment agreement, we have 6 mandated board meetings a year. So every 2 months we'll have a board meeting, and then we have quarterly reports. We've tried to be as simple as possible with the quarterly reports, but we do have like a couple investors that ask for special formats of the quarterly report. So we have to write a quarterly report general, and then we have to write a quarterly report for this investor and this investor.
Mm,
I think that like the reporting is, I mean, it's obviously a burden, it takes time, but at the same time is really kind of useful for me as a CEO for a reflection.
mm,
I find it useful to kind of look back and yeah, think about what we had said we were going to do and what we achieved and what our progress is. So it's a double-edged sword. Like it's beneficial, but it can be a drain on time as well.
yeah, for sure. Especially if you're doing several different formats, I can imagine that gets quite frustrating.
ChatGPT is quite good for that because you can just do the
Yeah,
first
yeah,
one and then say, here, make it
yeah.
like this, make it like that. Like, we're
Yeah.
not using ChatGPT to write it from the start, but
Yeah,
if
just
it needs to
different
change,
formats. Yeah, yeah,
yeah,
yeah,
yeah.
yeah, yeah. Good use, good use. Perfect. Irina, just to maybe double back again on the your relationship with your angel investors and beyond cash, what kind of I don't want to say benefits, but what kind of added value have they brought to you personally and to the company beyond the cash that they've given to you?
Sure. So we have quite an interesting relationship with our investors. I don't know. I just, I just have fun all the time. I try to have fun when I work, when I connect to them, when we talk. I'm asking how their kids are doing. It's always that kind of relationship. And I had a couple of situations when, first of all, I realized that our app that we developed, our first MVP, didn't work. And I was like, okay, what should I do? We had, well, of course, we had to continue, but that's a risk to try to fix that app. And so I called our investors and I say, okay, guys, what should we do? I have an idea and it's risky, but I want to do it. And they say, yeah, so why do you ask us if you can just do it? Because it's your company, right? And
Mm,
we don't have any board meetings, so I just text them and say,
mm,
hey, here's my result for this month. Here's what
mm.
we've achieved this year. We'll have this net profit. And they're like, yeah, great. Because the previous companies, they invested. Some of these investors, they are just beginner investors, and some
Yeah.
of those companies failed. So they're just so happy that we continue working. And other investors were so brilliant that 5 investments were
Mm.
successful, all
Oh
of them.
wow. Yeah.
And that's unique. So how we talk to them, that's always so monthly updates, always. I'm sending monthly updates.
Mm,
And they're open and they're public. So also our partners and those who gave us equity-free money and those who are interested to invest in the future, they can always
mhm,
follow our company updates. And
mhm.
something that is like a secret information, I can do WhatsApp
Yeah.
with our investors. And sometimes we can just call each other as a video call, and we never schedule it. So if I want,
Mm,
I just can call and ask the question. So there's this kind of relationship with them.
cool. Yeah, that sounds great. Lots of just normal relationships where you can pick up the phone and ask a question. That sounds really
Yeah,
cool.
but maybe I can
And
just add one, that we had a beginning of a really toxic relationship, and then
mm,
I had to take action.
hmm
Because so when the owner of the fund is a GP, he invested, but
hmm
then there was a manager who had to control us,
hmm
and he was calling me like every week, asking me for an hour of my time. And I
hmm
said, guys, you invested not that much to control
Yeah.
me all the time, first of all.
Yeah.
And I had to escalate it to the management and say that, hey, they are just, blocking my work. And that was, and I'm proud that we did it, because usually founders are a little afraid of investors. I don't know why this inequality exists, but
Yeah.
founders somehow are afraid, and that's why they are not saying directly what they feel. And
Yeah.
we were just tired of that relationship, and we just say, okay, you invested. I'm doing my job, and I need to make it profitable. So please just step aside, and when we need it, we just call you. And
Yeah.
founder understood that.
Yeah, that's good. That's good. You need the time to put their money to work and make this
1 hour every week is just
yeah. It's
crazy.
yeah, like if every investor asks for that, it's completely unsustainable, you know. Very good. So Yulia, maybe kind of last question to you. When communicating with investors, it's always easy to tell them the good news, right? So what about when you've got to tell them some bad news when things don't work out?
Yeah. We had one case where something really bad happened at our production, and physical production always has additional risks. So yeah, what I did, I just transparently called every investor and explained them the situation. But of course, I didn't come with the fact that, well, this has happened. I came with the fact, well, this has happened, but there is an insurance that is going to cover that. There is a shift of our timeline. That means we are not going to achieve our goals, and we will have like a delay for 1 month and a half or 2 months. But basically, I already came in with a plan. So I think that's probably the rule of any type of a communication. That yes, you want to transparently communicate the bad news the same way as the good news. But with the bad news, you probably want to come with a plan, or if you don't have a plan for that, you can reach out for the advice. So yeah, and I mean, to be honest, we are not the best in doing the reports. I always see Irina's reports, and I think, well, we should do much better. I really admire what she's doing with every month report, and like really being transparent and open about that. This is huge. I think that's what helps to see everyone that you are doing well. Depends how you're doing, but I think you always have something to share. And even if you're sharing transparently, that's always better than not to share anything. And on the previous panel, I heard the requirements from the investor that they do require 1 hour meeting every week, and that they require board meetings every month. I mean, to be honest, I would never take in such an investor. And we deliberately do not have a board yet, because we just don't want to kind of have this legal procedure. So like, we don't want to add unnecessary procedures to make decisions, as obviously they invested money into us because they believe into us. Why do they want now to control every step that we do? So it's kind of catch-22, like that. How do you put money into the startup that then you want to have weekly meetings and board monthly meetings? It takes, I mean, let's be honest, like the board meeting takes 2 days of full time to prepare, then to conduct, then do the summary, all of the notes and so on and so on. It just takes two days out of the founder's time, which is very limited, I would say.
Yeah, absolutely.
Maybe
That's great,
I can
guys.
add here on
Irina,
on that board meetings, that why would someone would like to control something that is so small that is not worth it so far? Only when you're at seed stage and when you have maybe a couple of millions invested, then yes. And in the US, even during seed stage, there is no board. That's already a later stage, maybe later seed and Series A. Then they start a board, but not earlier.
Yeah, it makes a lot of sense. Perfect, folks. So look, this has been great. Andrew, Irina, and Yulia, thank you so much for jumping on and helping out on this program and on some of the previous workshops as well. And just wish you guys the best of luck with your next fundraise and the next part of your journey in your companies. So thanks a million.
Thanks very much.
Thank you very much.
Cheers, folks. Okay, so look, we're unfortunately coming towards the end of our workshop. I don't see, Georgie, any more Q&A popping up there. I think we kind of answered a few on the way through, and you brought a few to your panel at the time there as well. So yeah, look, just a quick recap. I've actually learned quite a lot today myself. I have an awful lot of notes taken here during the panel sessions. So hopefully you got a lot from it. Did a deep dive session. What's everything around what's happening after follow-up sessions. We had a really interesting panel today by Georgie on how they make decisions, how investors make decisions, and we'd some chat about some nice stories with the exits and successes that they're having. We just heard from Irina that she knows an investor that's had 5 investments and five positive outcomes. So we need to meet who that investor is and see what they're doing that's so impressive. And Anna did a great session on due diligence and on how to manage portfolio clients after that. So that was really, really informative. And we've just finished our flip session to look at angel funded startups and the journey from their point of view as opposed to the angel point of view. So hopefully you got a lot of value from that. And like I said, I definitely did. So yeah, Georgie.
Super brilliant. Yeah, I thought that was a great panel, and I also learned a lot. Really nice to see how founders are doing it now, and how much courage and bravery there is to say no to unsuitable angels. So I hope, yeah, that's really progressive and really refreshing to see. In terms of just wrapping up the program, this is our last workshop of 3. If you've attended all 3 workshops, you are now a certified angel investor, and we will provide you with a certificate of completion to say that you've done all 3 of these workshops. So really good, and hopefully you've taken a lot away from it that will help you to make great investments in the future. There is a Seeds of Bravery YouTube channel, so if you go into YouTube and type in Seeds of Bravery, there is a whole host of content there, recordings of pitches, there's soft landing workshops, there's podcasts, there's interview. It's a really, really meaty and full library of content from the Seeds of Bravery, so definitely worth checking out. And I think that is pretty much it from our side. Thank you so much for being here.
Yeah, absolutely. And thank you, Georgie, and the rest of the Access Big team there, Fionnuala, all of the Seeds of Bravery, larger team behind the scenes here. This is our 2nd year of this investor literacy program, so all of the panelists, the keynote speakers, the startups that participated. And like I said, I think we've learned an awful lot. I hope you have too. All of these sessions live now in our YouTube channel forever, so they're there for anyone to go back and recap. But just thanks everybody. This has been a really humbling experience to be involved in it. We massively appreciate this project. You're wonderful people that are what you're going through, and the support that you're all giving each other as startups and as founders and as support ecosystem in Ukraine at the moment. And just wish you all the absolute best of luck. And we're with you on this project until March and beyond that as well. So take care, folks.